We're glad you could join us on another conversation on Business Redefined. This is your weekly, most comprehensive look at the developments in the world of business investments and economics. We want to talk about leasing now. Ever since COVID broke out, there's been this long-running conversation about leasing versus purchase of assets and what are some of the benefits and demerits that you suffer in light of the same. And we are privileged to have Morak Kubai from Rentworks as well as Daniel. Welcome on set.
Thank you.
Daniel, let me kickstart with you. For many of us who don't understand what leasing is, just give us a very brief intro as to what it is, how it works.
Organizations will always face key decisions in their running of the business where they require assets. And the options that they have on the table is buy them on cash or take a debt. However, leasing brings in a very interesting tool in the sense that you can still be able to acquire the much needed assets to run your business, and yet you don't need to own them. Leasing is simply you hire, but on a long-term basis in exchange for periodic payments. It could be monthly, it could be quarterly, or it could be structured based on your business model.
So you hire on a long-term basis. Many people that I talk to out here will tell you that there's a belief in this country around the ownership of assets, whether it is at an individual level, whether it's at a corporate level, and you want to book them in your balance sheet in a way that you're certain that this asset is actually mine, and if anything happens today, I could liquidate it and hopefully it gives me a tailwind. How then do we now start to have a conversation around a shift from that inclination to asset ownership to leasing?
Basically, when any company is going into that financial position where they have to make that decision, they normally look at how much do I have for a particular asset? How much will I spend to buy it upfront? Now, how leasing benefits us is we take up that risk. We partner with a bank to give these leasing services to the client. So a client can choose to do vehicles, any movable asset under the same agreement. Now, the ownership part is, do I have that full amount today? If I don't, then I go to traditional banking, which is either HP or an overdraft, depending on what a particular company is looking at. Now, the benefit that lease brings is identify your supplier, negotiate on the price. We will charge you quarterly, monthly, half yearly, or half yearly in advance, depending on how your cash flow looks. All we ask for are your financials. Provided one is able to give us that comfort that they are able to pay for their obligations, then we will provide a client that particular asset that they're looking for. Now, the ownership part also, as a company, is you realize that you're not spending that cash today. And if you had a particular budget for particular assets, you can take more of those assets or a better version of that asset under lease because you're only paying a portion of that.
One example I can give you is look at a requirement for an excavator. It could be used in the mining industry, it could be used in providing services to the Wananchi, and give it a cost of 20 million shillings to acquire a new one cash. And let's say this county also has 20 million as a recurring budget every year. Now, for them to be able to roll out the services to the entire county, or for this corporate operation to be effective, they will only be forced to budget one excavator every year going forward. Now, when you come to leasing, when you talk to us, now you start to see the beauty of the product, because for that budget of 20 million, I'm actually able to provide you with 3 or 4 top quality excavators on a rental basis for each quarter with change to spare.
The cultural rigidity that we face is not without reason. Many players in this market will tell you why we believe in assets is because, one, a lot of our credit is still collateralized. So if I go to a bank, for instance, they'll ask me, what's your collateral? And the reason why we have this firm attachment to assets is because you never know what tomorrow will bring. You might need credit. You go to an entity and they'll tell you we need collateral. Then you can present the assets that you have. Don't you think then that's a viable point when someone is saying, okay, I would be thinking about leasing, but hey, who knows if tomorrow I'll need a facility?
The downside to that is, if I then go in the direction where I insist on owning the asset, 4 years down the line, how does that asset look like? is it giving me the returns that I wanted? And you see, now it starts to play a very difficult role in your organization, because as the demand for your product or services is increasing, the performance of your asset is decreasing. And you're stuck with it, because if then you need to upgrade, we're talking about the exact same thing you spoke about, where I need to shift what I have in hand first before I get the next one. Leasing takes these challenges away, all this worry, because one is we are able to give you an equipment that you can renew every 3, every 4 years, depending on how much we agree on that. Secondly is when you need an upgrade, we can do what we call an exchange on that product. You know, today you had a 1-ton truck, demand for your product has increased, you need a 5-ton truck. We're able to look at it and say, you know what, bring back this 1-ton truck, we'll look at the books again and we give you a 5-ton truck. It's very seamless and smooth in how we make it work, considering how it will have been a bit more difficult if he had been committed to debt.
One of the disruptions we've encountered in the recent past is COVID. And many business players will tell you that what COVID helped them realize is that they were asset rich, but they weren't sufficiently liquid. And then they were in a situation whereby you want to liquidate these assets, but you can't, because the market is just not in a position to take them on. How has COVID impacted the leasing landscape, Maura?
Across board, all businesses have been hit by COVID. And I mean, also leasing, because think about it, most companies have let their staff work from home. So if you had a budget for that particular year for particular assets, you've reduced the budget. So across board, it has affected all of us. That much I would not lie. But also to some other businesses, it has increased our business. So you see people like the counties are now moving more to leasing. They're entertaining leasing. It's just a few, 2, 3 things that they have to tweak for it to be able to be made.
Okay. Daniel?
There's also positivity to how COVID has impacted our industry, in the sense that for such organizations where they're asset rich but cash poor, we are able to have conversations with them and say, you know, leasing can provide a tool that can buy back assets that are valuable to you and be able to, with the cash that we've given back to you, it's injecting money into your business. The best they could get out in the market was basically a moratorium on their debt, or try to flog it in the open market and see what is the best price they could raise. But with us is now there's an increase in inquiries that, okay, I have an equipment that is 1 year old, there's a debt attached to it, or I bought it in cash, can you help me? And yes, definitely we can help. And so that has helped to increase traffic towards the leasing discussion. And it's proving to be quite positive.
Given what you've just said, I mean, what's the difference between what you do and what out here they're called vulture funds that, hey, company X is in distress, they have all these assets, we can buy them from you and thereby inject capital into you. Once you hold those assets, are you then going to lease them back to me? Because I still need them to be in business.
There's a very big divide, and the reason is we're not sitting and waiting for such opportunities. We're actually very busy funding new equipment in the market. However, we are inviting businesses that are facing a bit of a distress, because what other options do they have? Either they go under because they cannot liquidate the assets, or they try to renegotiate with the banks and it's still not going to take away the debt. Now, when we come into play and we say, here we have our product, it's a sale and lease back, is we buy the product and we still let you use it. So you still enjoy usage of the same equipment as you did before. But what you have now in your pocket is additional cash that you can now use to start up your operations again, increase your business. And therefore we find that this is an opportunity that is helping us to bring a solution into the market like no other, So it's a win-win situation.
Someone is watching this and wondering, if I were an entity and I'm considering the leasing option, what are some of the key things you look at to determine that this is a viable person to engage in a leasing arrangement with Rentworks?
So basically, we, like I mentioned before, we work with local banks to provide leasing services to our clients. So whatever the bank asks for is what we relay to the client. So we call them the KYC documents, know your customer. So that will be your normal documents that you take for either a HP or a personal loan. So that's your cash flow. You have to at least have been running for at least 3 years with some indicating that you have profit coming in. You need to do your cash flow for someone to see. You have audited accounts. Someone would want to also know who are the owners of the company and what do you guys do. So we also ask for the C12, CR12 documents. Basically all those documents put together, which is a whole list of documents. And then we also ask you, this asset you want to use it for how long? So you either indicate 2, 3 years, whichever term that the client is looking for. Then on those cash flows, we go through them. We see, okay, you're looking for this amount of money. This is what you're able to get for this period of years. So it being an additional asset to your business, then those cash flows will help to prove that you're able to pay for that. You find most blue chip companies are in that position. Some might not be, so we try and help them to realize either you do a sale and lease back, which is now sell to us some of these assets that you have so that you free up your cash flow, or maybe this number of assets that you are looking at, let's reduce them. And then we see that we give it maybe 2 or 3 years to see if you're able to now take a bigger chunk of money on the lease.
You partner with the banks in this leasing arrangement. And I'm here wondering, isn't there a bit of, for the lack of a better word, moral hazard in this sense? The bank, being the one who's being paid by the client, will definitely know company X is having financial difficulty. They seem to be having liquidity challenges. So, they just call Rentworks. Here's an opportunity, quote and unquote. Where is the Chinese wall between now you guys and the banks?
There is a line, and how we like to look at it, and it's not just how we look at it, how it is it's a partnership. You see, banks are good at credit risk. They're experts at that. We are very good at asset risk. So when you match the two, we're definitely able to give a very fantastic product into the market. And the banks actually rely on our expertise in terms of our knowledge of the assets that have been there. Given the tenure that you've had in the market, we know what assets work, what assets don't work. And so, again, the word is partnership. Yeah.
What's the minimum threshold of you talked about long-term arrangements. What's like the floor here? Is it like a 5-year arrangement? How does it work?
There is no floor. Basically, we will tend to look at the model of business that you follow, because say, for example, someone says they want an equipment for 5 years, but this is an equipment that will have being impacted by technology every 3 years. So it will not make any sense to put it on a 5-year lease term when we can actually have it renewed after 3 years. So it's a case-by-case basis that we can look at it and say what tenure best fits with your business. At the end of the day is, how is the equipment being used? After 5 years, what will be the condition of it? Will you be getting the returns that you're getting in the first year? So maybe it's best for us to put a 4-year term. You look at the numbers, you're happy with it, we're in business.
All right.
Also, to add on to that, some of these assets are dictated by carrier on how long you can particularly put them under lease. So assume like motor vehicles are depreciated at 25%, ICT at 33.3%, trucks and at 37.5%. So it would not make sense doing a very long term. They might not get the benefit. So that is why we actually come in and tell you, maybe take this term, then we do an extension on the same asset.
And that point by Daniel takes us to a short break. We shall be right back with a lot more on this conversation on leasing. Welcome back to this conversation on Business Redefined, where we are discussing leasing, and we're privileged to have Maura and Daniel from Rentworks. Welcome back on set.
Thank you.
When you look at it from a cost comparison standpoint, assuming I purchased an asset vis-a-vis going the leasing option, I'm sure someone watching this is wondering, how do the two compare? Granted, it should vary from case by case, depending on the depreciation of the asset and a number of other things. But from your experience, how would you compare these two?
Thank you. A number of factors that one needs to look at is if it's direct asset purchase, then that means they've put in a significant amount of money upfront. So that impacts on then what happens in the months and years to come when they need cash to run their businesses. If they're considering debt versus leasing, then even more considerations need to be made, because under debt circumstance, they need to provide collateral. They will need to put in a deposit as well. So there's a significant amount of contribution that goes into acquiring a debt finance. With leasing, it's 100% financing. We will not take a deposit, okay? And that is why we will look at your ability to repay. And once we're happy with that, then we're in business. So you start off using the assets immediately the leasing deal is concluded.
What are some of the opportunities you see in opening up in the market? And why I'm asking this is because we've seen, especially within the devolved government structure, a lot of conversation about going the leasing route as opposed to asset purchases.
There's a lot of opportunity. You see, I'll give you a practical example. We work with one of the counties, like Ipe County, where we've provided for their staff vehicles, their pickups, their governors' cars, and now we are in discussion for ICT. If you remember a few years ago, they were not in a position to do that. They would buy outright cash because it's in the budget. You find there's a car that has broken down because it's missing a part, a car it's broken down because they didn't do service on the car. Now when it comes to lease, we give you a full wet lease, whereby we provide you the car, insurance, tracking, maintenance and service, tires and batteries. So it's end to end. And also under the same agreement, you can come in and add assets into it. In the normal tradition of banking, you have now to start that whole cycle of providing documents again. But under a lease, you have the free will to bring in whatever assets you're looking at. We are also talking to other counties who are now seeing the way Laikipia is performing to also be in a position to go into lease.
How do you hedge the risk? And we all know the risk that comes with, particularly with the county governments. How do you hedge yourselves? Because, of course, it has implications in terms of, for example, if pending bills are not settled, how do you take care of yourselves?
We are not in a position to work with all counties across board. That is why, again, I'll use Laikipia County because it's one of the first counties that has done leasing. They are able to collect by themselves within the county their own money. Now, plus the one that the National Treasury gives them, then they budget on it. Whenever there's a pending bill, they still have to pay the pending bills. So what you've taken under lease, are you able to provide for it? So that is why the bank comes in and checks the credit risk. Are you guys able to pay? So whatever it is that you're paying currently in this current year, they look at the cash flow, what you're being provided for by government, and what you're collecting to be able to make sure that you're able to pay for what is outstanding under lease. And that is why you'll find probably where they would have taken, say, 100 cars, they say, let's take a smaller number and then grow with it. And that is what we've done.
In fact, just to add on that is because you will have counties that are so well managed that it's open knowledge to the point where if you are requiring financial information, they are not only able to provide you with the historical management of the finances, but even give you very well projected plans for the future that even go beyond the political scope of matters, if I should say so. Now, when you are looking at a county like that, you tend to be slightly more comfortable talking to them, simply because in the way they've structured their operations, you can see they're very open in terms of, come in, look at what we do, and therefore it gives us a measure of comfort to take risk on them as well.
Daniel, this conversation sounds like your target audience is largely the top tier, the counties, corporates, and someone must be wondering, is there a place for the retail, for people like ourselves? At an individual level, can I approach entities such as Rentworks and explore various leasing options?
That is a very interesting conversation because leasing for individuals is not yet a mature market. I will be very honest. From where we're coming from, basically because of various factors like just the culture that we have in the country, where we are not very good at managing credit, right? And so it's still a point of discussion, and that is why we tend to speak to SMEs and corporates in that space. But for individuals, we do have conversations that we encourage them that if you're looking at leasing as a product, then start to structure your corporate, your company, in a way that you will qualify for the product in the years to come.
Yeah. Yes, Maura.
For any particular company that is looking for leasing, let's say SMEs, generally you'll find most of us don't keep books of accounts. We do, some of us work like a kiosk. We really encourage the SMEs to do their financials. No one will give you debt if you're not able to prove you have financials, you have track record of what you're doing. Part of the training that we used to do for retailers as Rentworks, we partnered with other supermarkets, and one of the biggest guys who used to organize this whole particular deal for the retailers was, how do I push this product and still get service for it? So you include the tracking guys, the insurance companies, you bring in all the leasing companies. In fact, it was not just Rentworks, also the other leasing companies were there. You'll also find guys providing security for the supermarkets. So, and you encourage them, because remember, we have a very small tier of big retailers, and then there are many other small ones. All the small ones are doing very well, but they're not so well to a point where a bank would be able to give them a lease facility with Rentworks as a partner. So we encourage them, do your financials, account for your money, then we'll be able to push you to the next level.
Talking of opportunities, and if I may go back to that topic, is we also notice that there is a lot of discussions between the Bretton Woods institutions and government in terms of, managing the budget. And one of the key elements that came into play, especially from the IMF, was to encourage government, and especially government institutions like the parastatals, to cut back on their expenditure. And this is a space where we've started to have conversations with such organizations and tell them, considering the pressure that is now coming upon you, we are able to step in and provide you with the necessary equipment. You can still get what you need without the need to pay upfront for it, because now leasing becomes a very excellent tool in giving them an opportunity to pay what they can, predictable amounts, and it fits in with the cash flow that will tie in with the kind of requirements that the government wants from them.
The regulatory landscape. What are some of the issues that you think have provided a headwind in terms of a challenge, a tailwind in terms of an opportunity for the increased uptake of leasing as an option in this market?
What I like about this particular question is because government is one of the biggest uptakers of leasing. So that is a big milestone for this country. They've involved suppliers, dealers of motor vehicles, the insurance companies. They've grown the market by itself. So you find any particular company that is providing a vehicle to government, they are told to do particular things for a particular region. You have to involve the younger generation. You have to build something for that particular county. You have to encourage all the mechanics to come together to do this particular service. And they've also involved the dealers in providing for women in that particular region. So the disadvantage, or one of the key issues that have been brought up is where passenger vehicles, you're not able to claim VAT as a company. So imagine if you have a whole array of vehicles, then it might hit you, because if I'm not able to claim VAT of, say, even 1 million, 10 million, it's a very significant amount. And also, you find some companies, they encourage particular departments to take up these vehicles, as opposed to, say, now under lease. So after some time, they tell you, by end of the lease, I want you to own the asset, as an encouragement to the staff. So there's no continuity.
Right, and that point by Mora takes us to the close of our conversation on Business Redefined, where we have been looking at leasing and a number of issues, whether it is COVID-19, opportunities being presented in the market. Stay tuned to Business Redefined for coverage on more of such issues.